Good morning, everyone. Jen Tozer, your portfolio manager here. I am back again. I've been here recently to talk about high interest rates and inflation, and I've talked a little bit about the invasion in Russia. And when I talked about inflation the last time, I said, you know what, interest rates going from 25 to 50 basis points isn't a big deal because it doesn't create a hurdle to profitability. Well, guess what? When oil prices go from $80 to $120, it does. That's the type of inflationary behavior that does create issues with profitability. And if you don't believe me, just take a look at your gas bill. So what do we expect? Well, first of all, these higher oil prices are going to give the US Fed or the Canadian government a bit of an opportunity to not raise interest rates because they have a tightening effect. Just imagine you're a new person who just bought a home and you bought the maximum amount of mortgage you could, and all of a sudden your gas bills come in, they're double. You weren't expecting that. So that's issue number one. Number two is they do create a hurdle to profitability. It doesn't matter what kind of business you're in. You either have implicit or direct or indirect costs when it comes to energy. So for example, obviously if you're a trucking company, your fuel is a direct cost. But if you're a food shipping company, then the shipping is an indirect cost. So anyhow, this hurdle to profitability is now higher. So we've had to do a bit of a pivot in our portfolio to come away from companies that were based on future growth, because we've been in a very big growth period, and go towards companies that have stable, established businesses that weren't priced for big growth. And then the final thing that we need to talk about is what is the medium to long-term effects? Well, for these people, a lot of people who are really feeling the pinch of these high oil prices, they can't afford their life. Some of them may not be able to even afford their food. So what will happen is we will see price increases, wage increases. So people will go to their employers and say, listen, inflation's up 10%, it's showing in my food, you have to give me a 10% wage increase or I can't afford to eat. And that will happen. Now here's where we want to watch. Oil prices will come down. Not today, not tomorrow, but they will come down. Wages will not come down. So when the oil prices come down, but the wages do not come down, that's when the type of inflationary pressures that we need to watch for will occur. So if you have any questions, my name's Jen Tozer. As always, give us a call. We're here.